Good afternoon, members of the media. Welcome to the SC's media briefing for the launch of our annual report 2020. My name is Marina, and I'm from the SC's Corporate Affairs Department. With me are 4 members of our executive team. I am pleased to introduce the SC Chairman, Datuk Syed Zaid Alba, Deputy Chief Executive, Datuk Zainal Islan Zainal Abidin, Chief Regulatory Officer, Ms. Fu Lee Mei, and Executive Director of Market and Corporate Supervision, Encik Kamaruddin Hashim. Before we head into the Q&A session of the media, we will start with a pre-recorded message from the Chairman.
Assalamualaikum and a very good afternoon to all. It gives me great pleasure to welcome you to this virtual briefing in conjunction with the release of the Securities Commission Malaysia's annual report for the year 2020. In a year filled with unprecedented health and policy actions worldwide, what has shone through can be best described in one word: resilience. Our resilience as a nation, as well as the resilience of the overall capital market, which I will highlight in subsequent slides. Ladies and gentlemen, members of the media, today's presentation will be in 3 parts. First, an overview of the market conditions and performance in 2020, and second, the focus of our efforts last year. And third, we will end with SC's priorities for this year. Now, as this slide on the global market performance shows, 2020 was in fact a year of 2 halves, and it is marked by significant bouts of volatility. There was a sharp sell-down in the first quarter as investors fled risk assets as the pandemic and lockdown spread across the globe. And the swift global policy actions helped markets stabilize and recover. Prospects brightened further with the gradual resumption of economic activities and the start of vaccine production towards the end of last year. And this lifted markets to close the year strongly. Domestically, the Malaysian capital market remained resilient and orderly despite the higher volatility. Overall, our benchmark stock index and bond yields performed better than the regional averages. And from a sectorial perspective, the divergence in investor preference was clear, with pandemic-related sectors such as healthcare, which include glove manufacturers and technology, outperforming the rest of the equity market. Overall, given the market condition, it is gratifying to note that the capital market expanded by 7% to 3.4 trillion ringgit. This is really a testament to the market's resilience. And despite increased uncertainties in economic activities slowed or in some cases were halted, fundraising activities remain encouraging. Although lower overall amounts were raised through equity and corporate bonds compared to 2019, there was continued momentum in fundraising via ECF and P2P platform. This showed that some MSMEs were still able to access much-needed funding even under difficult circumstances. In fact, ECF amount raised increased more than 5 times in 2020 compared to the previous year. These platforms have proven to be a viable option to meet the financing needs of MSMEs. Our licensed fund managers too weathered redemption pressures during the height of the market sell-down. It in fact ended the year on a positive note, with total AUM increasing by 10% to 906 billion ringgit, helping to mobilize savings in the economy productively. Moving on to part 2 on our focus and achievements. The evolving economic and market condition last year warranted a recalibration of SC's focus and key priorities for 2020. At last year's annual report, I vividly remember sharing our measures to facilitate the continued functioning of the market and our intermediaries' operation. Such unprecedented times required decisive actions, and it was comforting to see all our market stakeholders, from industry players and service providers, step up and work cohesively with us to address emerging challenges. As mentioned earlier, the SC's first priority is to ensure market stability and continuity during this pandemic. Secondly, the regulatory efforts in 2020 focus on maintaining market integrity, governance standards, and protecting investors in a fluid and uncertain environment. Thirdly, the SC's developmental efforts prioritize immediate market opportunities and acceleration of technology and digital adoption. I will share more of this in the subsequent slide. In March, it was clear that public containment measures would likely cause disruptions to the orderly functioning of the capital market. Hence, regulatory flexibilities and relief were required to facilitate business continuity and market operation. And this included time extensions for filing, fee waivers, and exemptions. Here, we highlight a selection of the measures undertaken and its impact on our market participants, including PLCs and intermediaries. Now, as you can see, the benefits were widespread, and I'm pleased that our relief efforts have ensured continued market resilience and stability. Volatile asset prices last year necessitated stepping up supervisory vigilance and closer monitoring of key market segments, such as equities and corporate bonds. We also conducted stress testing to preempt and address any issues that may jeopardize market integrity. This included listed entities and intermediaries from fund managers to stockbroking firms. In addition to earnings, corporate disclosures were also monitored and reviewed upon detection of any material lapses. Our fund managers' liquidity risk management frameworks were able to handle the uneven redemption patterns. The overall market conditions were fair and orderly and well supported by ample liquidity. Last year, we issued guidelines to promote proper discharge of directors' fiduciary duties and an AGM checklist to encourage meaningful shareholder dialogue. A corporate governance council comprising of key CG stakeholders was also established. Even as the pandemic was significantly changing the business landscape, it highlighted the value of good corporate governance practices. Boards with sound and ethical principles are better positioned to respond effectively in steering their companies through the unfolding storm. It is encouraging that progress was recorded for several CG indicators, and in terms of gender diversity, I'm pleased to say that the percentage of women on boards of the top 100 listed companies currently stands at 25.6%. We also observed an increase in scam and unlicensed activities as market uncertainties created opportunities for the unscrupulous parties to take advantage of the anxious investors. To prevent significant harm befalling investors, we increased the intensity of our anti-scam awareness measures and interventions, which includes frequent investor alerts and the establishment of a special task force to deal with clone firm scams and unlicensed activities. As a result, there was also a rise in the number of complaints and inquiries we received. Now, given the numbers, I would like to remind investors to exercise caution before making any investments, particularly for schemes offered through the social media platforms. Complementing our investor protection initiatives, we also employed a wide range of enforcement tools during the year to ensure the most efficient and effective outcomes. And some of the highlights include, for example, 5 criminal convictions for securities fraud and submission of false and misleading information, and close to 3.9 million were restituted to investors and 2.2 million in penalties via civil action. And there were 45 administrative sanctions for various breaches of securities law and guidelines. Rapid digital adoption was the defining trend for 2020, as even our traditional market participants embrace greater use of technology. Our digital intermediaries and platforms observe increased account openings and transactions. For digital assets, the SC Sharia Advisory Council ruled on the permissibility of investment and tradings in digital assets. And we continue to engage with market participants on the development in this space. From a funding perspective, initial exchange offerings, or IEOs, were made possible while further flexibilities were granted to ECF and P2P platforms. Investor accessibility was also enhanced with new market players such as e-service platforms allowed to distribute capital market products. Our developmental initiatives also focus on enhancing market diversity and processes, as well as provide continued growth and employment opportunities. Greater flexibilities were provided to wholesale and PRS funds, while the scope of advice by financial planners was expanded to include stocks and bonds. Process enhancements for main market IPOs, retail feeder funds, convertible debt were also facilitated in order to reduce costs and time to market. Last year, market conversations and interests revolved around the theme of sustainability and ESG. Our SRI efforts centered on building capacity and ensuring a facilitative ecosystem for the SRI products to thrive. This includes the SRI Suku and Bond Grant Scheme to encourage green, social, and sustainability issuances. In line with our efforts to encourage the growth of social finance, the SC launched an innovative Waqaf featured fund framework. Thus far, 3 Waqaf funds have been approved. We now move to part 3, SC's focus and initiatives for this year. Overall, we are optimistic, cautiously so, that 2021 will see a post-pandemic reset that will put both global economy and the Malaysian nation back on track. Nevertheless, we expect the recovery could be prolonged, gradual, and uneven across sectors and countries with significant uncertainties still remaining. In this new environment, we are unlikely to go back to the status quo. There are a number of underlying trends we see shaping markets and businesses moving forward, and these, in fact, feed into our priorities for 2021. I've mentioned digitization and ESG previously, and perhaps an underappreciated consequence of digitization is the risk of rapid adoption without sufficient safeguards. I hope our market intermediaries will take cognizance of this and ensure that they put in proper processes and procedures to ensure the security of their systems and online tools. In terms of the overall market environment, uncertainties may impact corporate activities as well as funding requirements, especially for smaller companies. Understanding the investor psyche and risk appetite will also be important for us to better serve their much-needed varied needs. And given the trends and implications, these are our priorities and initiatives for this year. Underpinning all this is the aim of ensuring that the Malaysian capital market is accessible, agile, and accountable. We intend to provide greater support to MSMEs and startups by further enhancing the fundraising ecosystem to cater to their different needs. Efforts to strengthen and build awareness of the ECF and P2P ecosystem will continue, including enhancing its efficiency. We are also looking into new fund structures for early to growth stage financing. Efforts are ongoing to revise guidelines on unit trust funds and advisory license to accommodate changing risk appetites and investment preferences. It is also essential to continue efforts to bridge the digital divide and increase the investment literacy of Malaysians. The main focus of our investor outreach this year will be the silver population. The SC has also identified several initiatives to deepen market diversity and agility. A key thrust will be our digital agenda for the capital market. This includes facilitating new digital models as well as continued industry digitization, especially to enhance efficiencies in fund management. We will also continue with measures to encourage greater product diversity and explore opportunities in developing SRI and social finance. This will include developing an SRI taxonomy for the capital market, while we hope to encourage more Islamic social finance instruments to build on our Waqaf Fund framework. In 2021, we aim to strengthen our regulatory capacity in terms of systemic risk identification and use of surveillance tools. Other priorities area are developing our digital enforcement capabilities and continued action against unlicensed activities. In addition, the SE intends to expand the corporate governance practices to market intermediaries to promote greater industry accountability. Overall, our key market priorities will be market digitization, facilitating the growth of SRI and MSMEs, as well as to focus on unlicensed activities and scams. We will also be calibrating the medium-term direction for the Malaysian capital market. With the conclusion of the Capital Market Master Plan 2, it is time to set the tone for the markets for the next stage of the market's journey. The SC is in the midst of drafting the Capital Market Master Plan 3. This is the flagship policy document from the SC, and it will highlight, amongst others, the capital market solution to some of the most important structural challenges of the Malaysian economy and the longer-term capital market strategies that will be in tandem with our economic transition towards becoming a high-income, high-value-added, and inclusive nation. We will be happy to share more details with you when it is ready in the second half of this year. This concludes my presentation. Thank you very much for coming. I shall now open the floor to questions from the media.
Thank you, Chairman. Members of the media, we will now start the Q&A session based on the questions that we have received over the past few days. We will also address the questions that you submit through the Q&A function on Zoom. Chairman, the first question, this first question has been asked by just about every media. It is, and I'm paraphrasing, what is the outlook for the Malaysian capital market for 2021, and what are the SC's key priorities for the year ahead?
As mentioned in my presentation, we are optimistic that the global economy and Malaysia will be on the recovery path this year. This is given the progress of vaccines, our continued policy supports, and the overall resumption in economic activities. Nevertheless, significant uncertainties still remain, and overall recovery is expected to be gradual and uneven across all sectors. With that backdrop in mind, the SC will provide policy support in ensuring that the market remains resilient and orderly and be a key funding source to revitalize the growth of the Malaysian economy in 2021. And in 2021, our priorities will center on the developments which we see within the industry, and of course the needs of our market participants. And this includes facilitating the industry to further embrace digitization, which has been accelerated amidst the pandemic, facilitating greater fundraising for MSMEs and mid-tier companies, which is crucial for the economic recovery. We will continue efforts to raise awareness and efficiency of the ECF and P2P fundraising options among this target group, facilitating the growth of SRI, and leverage on ICM to further drive our SRI agenda. The SC will also develop SRI taxonomy for the capital market to complete Malaysia's national agenda and transition into a low-carbon economy.
Thank you, Chairman. The questions that we have received cover the same areas. The next one is on retail trader rebellion. What are your thoughts on the retail trader rebellion that happened early this year and the mushrooming of unlicensed investment advisors?
Uh, the SC has closely monitored the situation, in fact, together with Bursa Malaysia. We conducted real-time monitoring of all trading activities, which ensured an efficient, fair, and orderly market. There were, of course, chats which we noticed in social media, but these never really catch on. The market dynamics between Malaysia and the US are quite different. We welcome, as far as the retail participation is concerned, we in fact welcome to see the retail participation in this development of the equity market. The presence of a more diverse group of investors can create a healthy, active, and vibrant marketplace. The improved retail participation in our stock market was clearly evident, with local investors making up about 32.4% of total value traded, which is significantly higher than the 5-year average of 21.4%. However, we have to warn that investors must make informed decisions when trading. Investors must be cognizant, rather, of the risks and opportunities involved when investing in the market. Be cautious of social media chat rooms that try to influence investors to buy or sell certain stocks based on speculation or rumors. Please do trade based on fundamentals and not be swayed by rumors or what we call FOMO, i.e. fear of missing out. So on SC's part, we have issued cautionary notes, ramped up our investor education activities, and organized anti-scam awareness campaign under the SC's InvestSmart platform. And this is to remind investors to be vigilant on schemes offered on social media and the messaging platform. Our investor alert list is also constantly updated so that the public can be aware of unauthorized, unlicensed platforms, companies, or individuals before making any investment decision. And within SC, a special task force is established which focus on clone, scam, and unlicensed activities, while efforts are also directed to enhance internal capabilities in internet surveillance and in identifying unlicensed or unregistered persons offering capital services or products.
Thank you, Chairman. The next question is a popular one. Is the SC going to take any action against public listed companies that made misleading or false announcements on procurement or distribution of vaccines? If so, what? What penalties can these companies face if they are found guilty?
The SC views the dissemination of false or misleading material information by PLC, regulator entities, and even the media as a very serious breach under securities law. All listed entities, its directors, CEOs, must exercise care and diligence when making any material announcement, and above all, maintain accountability. And if you look at our website, the SC and Bursa have taken various action on PLC and directors for offences such as insufficient insufficient and inaccurate disclosures by PLCs. And any person who are found guilty may face imprisonment not exceeding 10 years and a fine of not less than 1 million ringgit.
Thank you, Chairman. Yet another hot question that has come in several times. It's a two-part question. The first one is the SC looking into the transaction by M-Bank senior officials in December? Is this considered insider trading? And the second part is, can you share more details of the M-Bank settlement? Thank you.
Well, we are aware of this, and if you are to ask whether or not this is considered insider trading, we, of course, cannot make any comment or determination until the SC has reviewed all the evidence and all the circumstances relating to the matter. Well, on the recent M-Bank settlement, the MOF has issued a statement on the settlement. And since the settlement is still in progress, we are not able to comment any further.
Thank you, Chairman. The next question relates to fundraising. I'm paraphrasing. What do you expect of the fundraising pipeline for the year, despite the continued uncertainties locally and globally?
The COVID-19 outbreak and disruption on businesses has affected fundraising activities. Significant uncertainty still remains, which will impact businesses' decision to list. However, capital market continues to be a key source of financing. IPO is still seen as a good way for companies to raise funds for expansion of their businesses and also to improve their corporate standing. In 2020, despite a challenging period, the main market IPO saw 20% growth. And in 2021, this year, we expect a healthy pipeline of around 30 IPOs for the year. And can I pass this to Kidin to expand further?
Thank you, Chairman. I think in addition to the IPO activities that we have seen in 2020 and also the anticipated IPO for 2021, I think there's also development that we are continuing going to see happening in the bond and sukuk market. And I think based on the industry feedback, issuances of corporate bonds and sukuk for 2021, we expect to be in the range of between 100 to 110 billion ringgit. And we see continued economic recovery, which are going to lead to increased private investment as business confidence increases, as well as the growth of quasi-government corporate bonds in 2021 amid the resumption of large infrastructure projects. Certainly, the present conducive financing landscape may also persuade issuers to raise their issuances to secure a much more lower financing cost. That's thank you, Chairman.
Thank you, Chairman. Thank you, Kidin. Another popular question that has come in is on Special Purpose Acquisition Company, or SPAC. What does the SC think about the current euphoria surrounding SPAC listings globally? And is the SC going to relax the rules to encourage more SPAC listings?
Well, at the SC, we constantly look at the latest development on the global front, and we will assess if these developments will firstly be relevant or benefit the Malaysian market. We have observed the resurgence of interest in SPACs in other jurisdictions, and the what do you call that? The heightened interest of using such fundraising vehicles could be due to the low interest rate environment today, and investors are obviously looking for alternative avenue for higher returns. And the other thing is on the emergence of tech-based new businesses models triggered by the global lockdown pandemic. We are definitely, I would say that we are definitely keeping a close watch on the trends, especially if there are any relevancy to our home market.
Thank you, Chairman. We have received, the next question is on shareholders and virtual general meetings. I'm paraphrasing. It has been highlighted that some companies choose to ignore questions posed by shareholders during their virtual general meetings. How will the SC tackle the issue?
Can I invite the CRO to respond to this?
Thank you, Chairman. As far as shareholder engagement is concerned, I think the SC stand has always been very consistent, irrespective of whether the AGM is held through a physical or virtual meeting. The SC expects engagement with shareholders to be meaningful. And I think in this respect, good corporate governance practices will dictate that boards and management take up and answers all questions posed by shareholders. Now, having received this feedback ourselves, the SC has addressed this in its guidance on the conduct of virtual general meeting that we have updated recently. So another aspect we want to also perhaps add on is the fact that when we did our survey with shareholders who have attended virtual annual general meetings, I think the preference is for SC moving forward to facilitate both physical as well as virtual meeting or even a hybrid meeting. So thank you, Chairman.
Thank you, CRO. The next question is a corporate governance question. What is the SC's view on the increasing number of politicians being appointed to the boards of listed companies?
Appointment of board members on listed company should be looked at from several dimensions. Firstly, shareholders have the power to appoint or reappoint directors by exercising their voting rights. So we urge shareholders to exercise their rights in ensuring that not only persons who are fit and proper and can contribute to the listed company's growth are appointed to the board. And secondly, the nominating committee on the listed companies have the responsibility to ensure that persons nominated to sit on their board is competent and can dedicate sufficient time in discharging their duties as board members. And the third reason is that listed companies should also be guided by the OECD corporate governance principles for state-owned enterprises. And in this respect, under Chapter 7, OECD's guidance states that persons linked with executive powers, such as head of states and ministers, should not serve on boards, as it may cast doubt on the independence of judgment. All directors are expected to exercise powers for proper purpose, in good faith, and in the best interests of the company. Shareholder activism is another aspect. Shareholders have a role to play, and the ultimate powers to reject or approve the approval of the directors is that of the shareholders.
Thank you, Chairman. The following question we've received is on foreign selling. It has been sent in quite a number of times. The question is, it seems that there is a lack of interest among foreign investors in the Malaysian market. How worrying is their declining participation? Thank you.
Factors that drive decisions for foreign fund flows are actually multifaceted. As we know, international fund managers take into account both tactical short-term factors as well as longer strategic structural issues in determining their assets portfolio. In 2020, for example, given the unprecedented uncertainties globally, fund flows to emerging and Asian markets, including Malaysia, not surprisingly, were affected by the general flight to safety. As a result, we saw gold price rising steadily over the course of the year, as well as a firm demand for safe haven currencies and bonds. And can I invite Islan to expand more on this, please?
Thank you, Chairman. Well, maybe just to pick up on what Chairman has just mentioned, in terms of the flows in emerging or foreign fund flows into or out of emerging Asia, maybe I can just quote some statistics here. For emerging Asia, ex-China and India, there was a net outflow of about $56 billion from equity markets in 2020, out of which about 20 billion was from ASEAN countries. And as a result of this, as at the end of February 2021, foreign shareholdings in Malaysian equities stood at about 20.4%. This compares with the average over the last 20 years of about 22.4%. But we do know that this is still higher than a level of about 18% that was recorded in 2002, which was the lowest level over the last 20 years. So in other words, fluctuations of foreign participation in Malaysian equities across market cycles are not uncommon. And we have seen repeatedly in the past, where foreign funds came in and got out of our market, sometimes over very short periods of time. Essentially, when there are opportunities to make some returns, investors will emerge. And we've seen this, repeating itself. But on that note, also, I suppose based on the sectoral profile of the PLCs in Malaysia, movements or changes in the relevant factors or indicators that affect Malaysian PLCs would influence fund flows as well, relating to some of these counters. And also at the same time, we may also not enjoy significant inflow of international funds that are seeking exposure to sectors or industries that are not well represented on our stock exchange. This last point may also explain the periodic disparity between our economic and stock market performance over the years, because where some sectors that drive our economic growth are not proportionately represented on the exchange. So, in fact, this is actually an area of opportunity for Malaysia, I believe, in terms of attracting more listing of companies in those sectors or industries. Thank you, Chairman.
Thank you, Chairman. Thank you, DCE. The next question that we have is related to the venture capital and private equity industry. The question is, what is the outlook for the venture capital and private equity industry? Was the slight decline in investment activity in 2020 due to the pandemic?
Well, as most of you may know, due to the pandemic, most VC, PE firms focus their attention on ensuring business continuity of their portfolio companies. And in terms of new deals, we note that the firms had largely taken a wait-and-see approach, especially in the early stages of the pandemic. And the MCO restrictions had obviously also affected the deal-making processes, especially the ability of the managers to conduct due diligence on potential investee companies. And moving forward, the outlook is encouraging. Outlook is encouraging for the industries as businesses are showing signs of recovery, and the private market represents an important source of capital for expansion. I think Island, would you like to expand a bit further on this?
I think apart from the recovery in some of these businesses that we are seeing now, including the MSMEs, we are also actually positive on some of the recent local developments that we are seeing. One of which is the establishment of Dana Penjana, for example, last year, which we believe will give a boost to the local startup ecosystem. We also positive on and view favorably the My Digital initiative, which was announced recently, as it articulates the vision of how the digital economy should be shaped over the next few years. These policies and announcements actually set a very clear tone that this segment is a priority for our country, which in turn suggests an opportunity for PE and VC industry, because significant amount of investments would be needed to spur the growth of this segment. It is also important, I suppose, for us to recognize that both the VC and PE industry is part of the overall funding ecosystem, and they play a critical role in bridging the financing needs of businesses as they grow and expand from one stage to another. And with this in mind, I think what we are doing at the SC is engaging with various stakeholders directly, as well as through the Malaysian VC and PE Development Council, which we chair, to get feedback on what enhancements may be required to ensure that investments are channeled more efficiently in this space. I think some of the areas we are looking at in this regard are deal pipelines, talent development, investor awareness and education, as well as corporate venture. Thank you.
Thank you, Chairman. Thank you, DCE. The next question is on retail investors. Bonds are an essential component of portfolios during down periods in the economy. However, there are a limited number of retail bonds available for retail investors. How will this change this year? Thank you.
Now, as you know, retail investors are able to access the bond market directly. The retail investors are able to access the bond market directly as well as indirectly. Historically, retail access to the market has largely been through our fixed income unit trusts, and thus the investment access is quite limited. But following feedback from the market participants, we have introduced several initiatives to facilitate direct retail access into the bond market through enhancement of the issuance process for primary market and a seasoning bond framework to facilitate retail access to corporate bonds and sukuk originally issued to sophisticated investors. And since then, we have seen an increase in direct retail participation in the market, but the numbers remain small. At this stage, perhaps, Kidin, you want to expand?
Thank you, Chairman. I think given the numbers and the level of participation remaining small, I think there is certainly a need to build up awareness on retail bond offering, as it gives more of investment opportunities for retail investors with characteristics such as attractive yield, especially under current low interest rate environment, and with a manageable risk return profile. So the SC continuously work closely with the industry to enable more retail offerings, distribution and access point, for example, offering of bonds and sukuk through digital platforms. We have also undertaken a lighter touch approach to products and processes. For example, we have granted businesses flexibility to issue convertible notes to VC and PE firms and launch the issuances directly with the SC. We will continue to look at ways to enable a more cost-effective issuance approach for smaller size companies, especially for the SMEs to issue bonds and sukuk. Thank you, Chairman.
Thank you, Chairman. Thank you, Kidin. The next question we've received is also from several media. So again, I'm paraphrasing. What is the SC doing to bring greater attention to SRI ESG investing, since it is a significant investing trend? Thank you.
Development of SRI ecosystem within the Malaysian capital market has been a priority for the SC. During last year's annual report session, I think we shared with you on the launch of the 5-year SRI roadmap for the capital market. And over the past year or so, further initiatives have been undertaken to continue building a facilitative ecosystem for SRI, premised on the 5I strategy, which was articulated in the roadmap. This includes the initiatives highlighted by us earlier, namely the dedicated SRI Center on Bond and Sukuk Information Exchange, or BICS, the Wakaf Featured Fund Framework, the expanded SRI Sukuk and Bond Grant Scheme, and the 2 Centers of Excellence. As we heard earlier, the Wakaf Featured Fund Framework has already attracted applications from several fund managers. The 2 Centers of Excellence, which focus on capacity building for corporates and financial intermediaries respectively, have already organized a number of programs covering different aspects of sustainable finance. These programs are critical in building awareness and capacity for PLCs. They can be guided to adopt better sustainability practices, which will attract more investors and fund managers for intermediaries. They will also be able to structure and provide innovative solutions that will be for the purpose for their customers. Perhaps I can get Islan to expand a bit more here.
Yeah, okay. Maybe also to share with all of you, I think apart from the initiatives in 2020, which the Chairman has mentioned, I think more recently in February, we launched the Navigate Capital Market Green Financing Series. This is a program that's aimed to create greater awareness and connectivity between green companies and the capital market. And the first edition of this Navigate series was held virtually recently at the end of February, which focused on the MSMEs and also the role of the alternative capital market financing avenues, such as the ECF and the P2P platforms, to serve the needs of the MSMEs. The future sessions under this Navigate series will also focus on larger scale financing through issuances of sukuk, for example, under the SRI Sukuk framework. Another very significant initiative which has been mentioned earlier, but just to expand slightly on this point, is the ongoing development of the guiding principles on SRI taxonomy for the Malaysian capital market. I think this taxonomy aims to provide clarity on the identification and also classification of sustainable economic activities. I think this is something which is a very important building block within the ecosystem of sustainable finance. And as Chairman mentioned earlier, the work of this taxonomy actually complements the government's overall national agenda on sustainability in moving Malaysia towards a more sustainable economy. And I think apart from this, also to complement the national agenda, the SC together with Bank Negara as co-chairs of the Joint Committee on Climate Change are also driving development of the sustainable finance ecosystem more holistically in active collaboration with industry players. And also, I suppose, beyond the national boundaries, to be consistent with the growing focus on sustainability across the region as well as globally, the SC is very much involved in sustainable finance initiatives at ASEAN level, as well as among global capital market regulators via our participation in IOSCO committees. Thank you, Chairman.
Thank you, Chairman. Thank you, DCE. The next question is a follow-up on Bursa Malaysia's regulatory subsidiary, or RegSub. The question is, last year, SC issued a statement about SC and Bursa setting up a regulatory subsidiary. Is that still ongoing?
Can I get Lee Mei to respond to this?
Thank you, Chairman. For the establishment of the Bursa regulatory subsidiary, all the operational framework is already in place. So once the regulation is finalized and gazetted, we should be ready for implementation by second half of this year. Thank you, Chairman.
Thank you, CRO. I think we still have time for maybe one or two more questions, Chairman, if you don't mind.
Okay.
Again, it depends on how long we take to answer this one. The SC has pushed the digital agenda in the capital market since 2013, 2014. What has the progress been, and can you share what's in store for the future?
The SC's agenda started, in fact, in mid-2010, and it is now starting to bear fruits. Malaysia introduced regulated ECF and P2P way back in 2016, which in fact was the first in the region. Today, there are a total of 40 regulated fintech players in the Malaysian capital market. And I think we've seen impressive growth across various digital platforms. MSMEs issuers can raise funds, and investors can now participate in the capital market via digital investment managers, ECF and P2P platforms, digital asset exchanges, and also the online-only broker. Perhaps I can pass to Lee Mei to give more details on this.
Thank you, Chairman. As an update, we now have 8 digital investment managers, and the number of accounts opened in 2020 has increased by more than 700%. We now have 10 ECF and 11 P2P platform, and we see the number of investors increasing from about 20 to now 30,000 in total. We have 3 digital asset exchange operating, and the number of accounts opened in 2020 has increased by more than 1,000% compared to 2019. To date, there are currently 450,000 accounts open across the 3 platforms. As for the SC's work moving forward in this area, let me bucket it into 3 components. One is developing MSMEs, 2, enhancing efficiency, and 3, building resilience. in terms of developing the MSMEs, you would have heard yesterday there was this announcement of the SC liberalizing the fundraising limit from 10 million to 20 million. And hopefully this will help more MSMEs come on board to raise funds. We have also last year opened up the trading or secondary market trading for the ECF platforms, and hopefully this will provide some exit mechanism as well as some form of liquidity in the ECF market. Thirdly, many of you will know the ST administers the My Co-Investment Fund, where we co-invest with the crowd to support MSMEs. Now, as far as enhancing efficiency, SC is looking at driving adoption of digitization amongst intermediaries, both the brokers and fund managers. Of course, we hope to catalyze more e-opening of accounts, e-corporate action, and e-submissions moving forward. Now, as we catalyze this for the industry, internally, the SC is also building up its own capabilities. We are looking at how we can leverage machine learning capabilities to enhance our supervisory surveillance as well as enforcement functions. Now, thirdly, in terms of building resilience, I think as we make this big push towards digitization for the industry and for the SC, there is a need to build resilience. I think for the intermediaries, resilience in protecting themselves against cyber risk, of course, and resilience of the investors themselves as well, given the rise of online scams. Thank you, Chairman.
Thank you, CRO. Thank you, Chairman. Thank you, Chairman and members of the ET. Those are all the questions that we have time for. I'd like to thank the members of the media for attending our media briefing for the launch of the Annual Report 2020. For those of you who have not already downloaded it, you can find it on the SC website. Before we close, may I invite you, Chairman, to say a few words to the media?
I think to end the media session, I would like to thank all of you for your time today, and for all the discussion, for all your questions which has been put forward. As I think we all have said, that we each and every one of us will have our parts to play to bring the Malaysian capital market to greater heights and ensure its continued relevant and sustainable growth. We look forward to closely working with the media on the initiatives we have planned, and on behalf of my executive team here today, I wish to thank them, and to everybody out there, I wish you all the very best of health, and please continue to stay safe. Thank you very much.
Thank you, Chairman. Thank you, members of the media. Good evening.